You're staring at a screaming open, candles slamming, bid and ask flashing like headlights, and your finger itches to hit size because the chart looks obvious. That exact moment is the trap this script solves, with a clear, process-first plan you can apply immediately. The market open is a pressure test disguised as opportunity. It rewards speed and punishes indiscipline. And for many traders, the first 20 minutes act like a slot machine, handing out intermittent wins that reinforce bad sizing and bad timing. Let's be precise about terms once. R is your unit of risk per trade, VWAP is the volume-weighted average price for the session, and cumulative delta is the net difference between buying and selling aggression over time. I'll use those three phrases and then keep them short. The problem is simple. Volatility at the open amplifies noise. Noise fools your brain, and your brain hands you checks you shouldn't cash. The stakes are clear. A few impulsive 1.5R entries after a nice early win can convert a green morning into a stretched drawdown by midday. You can treat that outcome as bad luck, or you can treat it as predictable psychology with predictable fixes. Mechanically, the error starts in your reward system. Fast, unpredictable wins are intermittent reinforcement. They light up dopamine pathways and shorten your patience window. You start to believe that being fast equates to edge. That belief drives three behaviors: size creep, rule slippage, and a lowering of confirmation thresholds. In plain terms, you add size when you should have held back, you skip your own checklist, and you accept thinner signals. That combination turns a 0.5R early pop into a 2R donation to noise. I'd rather miss the first 0.5R than donate 2R to noise. Now, the fix is process, and process needs concrete, repeatable rules. Start with a pre-open baseline. Define your A setup criteria before the bell, commit baseline size as 1R, and set two explicit exceptions. Exception 1, off-plan impulse trades are allowed only at 0.25R maximum and only after a confirmation gate fires. Exception 2, multi-factor exceptions for structural breakdowns require cross-asset confirmation and a manager-level decision. You, sober. If you can't write that before the open, you don't trade that morning. Here are the gates you'll use to convert open volatility into tradable motion. Rule A, volatility gate. Wait for either two 5-minute closes past VWAP with rising cumulative delta, or two consecutive range breaks where session volume exceeds 1.2 times baseline. Rule B, structure gate. Accept only trendline break, plus clean retest, plus higher low on the 5-minute, or cross-asset confirmation where ES plus sector breadth show greater than 70% advancing. Rule C, time gate. If none of the above fires in the first 20 minutes, step back and reevaluate. You may re-enter only after a new, fresh 2-bar confirmation following a 10-minute cooling window. If X doesn't meet A or B within your time gate, then you don't trade it. Wait for confirmation. Make the confirmation measurable. Don't wave your hands. Add timers and cooling rules. At the open, set a 12-minute no-size increase timer, baseline size only until 12 minutes elapse, and one of the concrete gates triggers. After any rule break, enforce a cool-off of at least 30 minutes or until session structure clarifies, whichever is longer. If you take an off-plan impulse, then cap its size at 0.25R and add a mandatory 60-minute cooling window before you can increase size again. Size discipline matters more than clever entries. Baseline trades use your normal 1R. If you add size to lean into conviction, reduce that add-on by half and document the reason in the trade note. Log it. Use journaling tags to surface patterns. Hashtag A-setup, hashtag false pause, hashtag off-plan, size break, tilt. Those tags make noise visible during your weekly audits. Now the playbook in step-by-step form. Before the bell, map 3 branches for each potential trade: best case, worst case, and most likely case, including price targets and stops in ticks or cents, and the R equivalent for each. Pre-commit to entry type, limit, aggressive, or wait for retest, baseline size, and 2 specific confirmation tests that will approve your entry. Example approval tests: 2 5-minute closes above VWAP with rising cumulative delta, or trendline break plus a clean 5-minute retest showing higher low, or 2 range breaks where session volume is greater than 1.2x baseline. If your pre-market plan lacks at least one of those discrete tests, cancel the trade idea. Practice a simple 2-stage partial exit. Take half at 1R, move stop to break even minus a tick, then trail the remaining half to the prior 5-minute higher low only after 2 additional 5-minute closes above VWAP with rising cum delta. That trailing rule keeps you attached to structure, not emotion. For size creep, enforce rolling caps tied to session P&L and trade count. No single trade may exceed 30% of your daily target or 5% of your account, whichever is smaller. After 3 consecutive wins, reduce size until your next trade passes a pre-approval checklist. The checklist compresses neatly: clear entry trigger, mapped stop and target in R, confirmation test met, size set and capped, and cooldown timer status checked. Set your device to sound a no trade gong if you try to exceed size during a cooling window. Now for the human side, the mechanism that keeps failing without these rules. Your primitive brain values immediate feedback and hates delayed reinforcement. Early open volatility gives you hits fast. You remember the hits and forget the misses. The corrective is exposure to waiting. Train your tolerance with drills. Drill 1 is a 7-session feed audit. Mute news and alerts for the first 15 minutes of each session for 7 consecutive sessions, and record how many A setups would have passed your gates. Drill 2 is the silent platform block. Trade only limit entries, no market orders, and force a 12-minute minimum between adding size and the entry. Drill 3 is the blind entry pre-commit exercise. Before the bell, write your intended entry level and stop on paper. Fold it and open it only after the setup either meets your concrete test or fails your time gate. Those drills recondition the urgency reflex into a disciplined pause. Now, a time-stamped mini case to tie this down. NQ, 10:17 a.m., midweek. Price pushed up, 2 5-minute closes above VWAP, cumulative delta rose steadily, and session volume was 1.35 times baseline. The first entry at baseline size gained plus 0.5 R in 6 minutes, and the trader held base size until a clean trendline retest at 10:36 that met the trailing rule. They then trailed to the prior 5-minute higher low and exited half at 1 R and the rest at 2.1 R. Total realized 2.6 R. This is an example of following rules, not a promise. That case shows how measurable confirmations at the open can turn early volatility into a series of controlled outcomes rather than a series of impulses. Contrast that with a messy day I had. The bell rang, my commute coffee left a bitter film on my tongue, I felt an odd rush, and I reached for an off-plan ad. Price reversed, and I paid 1.2 R for that slip. Sensory detail and regret both. It was preventable. The drill following that mistake was simple and effective. A 60-minute cool-off, a written apology to my journal, yes, I do that, and then stricter caps for the next 3 sessions. You will make a slip too. Accept that and design the containment. A useful counterexample is the rare high-velocity event where waiting costs you materially. A coordinated macro print, a surprise rate call, or a flash gap where liquidity evaporates. For those, build an exception template, multi-factor confirmation that includes cross-asset breadth, news verification, and a scaled immediate response rule. For example, allow a maximum 0.5R quick response entry if ES and sector breadth move in sync and session volume exceeds 2.0 times baseline, and only if you get a second confirming 5-minute close after the initial move. That prevents you from going full impulse without turning off discipline entirely. The trade-off you need to live with is simple. Miss some quick scalps and preserve expectancy. You sacrifice speed for sustainability. That's a trade most professionals prefer. If you're unwilling to miss a few wins, then you'll accept a few outsized losses instead. Practical implementation steps for the next 10 sessions are concrete. Session 1. Implement the 12-minute no size increase timer and enforce baseline size only. Session 2. Adopt the 2 5-minute closes past VWAP plus rising cum delta rule as your primary gate. Session 3. Run the 7-session feed audit. Sessions 4 through 6. Practice the silent platform block twice and the blind entry pre-commit once. Sessions 7 to 10. Audit results, tag recurring violations with hashtag off-plan and hashtag size break, then adjust caps and cooldown lengths experimentally. Every weekly review, score yourself on process compliance percentage rather than P&L. Aim for 85% compliance as a moving target while you tighten rules. Measurement matters. If you can't measure it, you can't improve it. One short synthesis sentence will help tie the arc together. When you convert open chaos into measurable gates, timed rules, and capped size, you replace an emotional reflex loop with a repeatable system that helps preserve your risk-reward integrity and keeps you in the game longer. If X, then Y rules must be visible at the moment of decision. Don't rely on memory. Put the key gates as quick reference on your platform UI or as a small printed card by your keyboard. When the bell goes, your hands should find the card before your emotions pull the bleeding edge. Keep a hard cap on daily exposure and session exposure. Never let a single handshake-sized win justify a size increase that breaks your daily cap. On journaling, use the tags we discussed and record one sentence on the physiology of the trade, heart rate, breath, coffee level, or whatever sensory cue indicated heightened arousal. That sensory note ties the cognitive pattern to bodily cues, making future recognition faster. You will have edge protection patterns too. Use a rolling account exposure monitor that alerts when you hit 60% of daily risk. When it fires, switch to observation-only mode. Program an automatic sound or visual cue when you try to deploy above your cap. The interruption buys you time to apply your pre-trade branches. If you break a rule, enforce a cooling protocol. 30-minute minimum if it was a size break, full session off for a repeated off-plan trade, and a written remediation plan before you trade again. Those are punitive to the ego, but constructive to the account. A short hands-on drill for the next week. Set your platform to mute non-essential alerts for the first 15 minutes, trade only on limit orders for the open, and require at least one of the 2 concrete gates to fire before you add size. At the week's end, evaluate 3 metrics: rule compliance percent, average R per trade when rules were followed, and the number of off-plan impulses attempted. Use those numbers to adjust caps, not gut instincts. Keep your language to yourself in the moment. Short cues work best. Wait. Breathe. Check size. That pause kills most impulse trades. There will be a natural inclination to defend your missed trades when you apply these rules. You may say you'd have made 0.5R if you jumped in earlier. That's fine. You'll miss some, and you'll also stop donating to noise. I'd rather miss the first 0.5R than donate 2R to noise. Close by committing to one operational change today. Pick one gate. The two 5-minute closes above VWAP with rising cumulative delta is a robust starting point. And enforce the 12-minute no size increase timer for the next 10 sessions. Use the drills, tag every trade, and treat cooling rules as non-negotiable. Discipline feels slow at first and boring on the way up, but it compounds. Return to the data, not to the narrative. This approach may help you convert open volatility from a temptation into a source of structured opportunity. And if you stick to the plan, your decision-making will become calmer, cleaner, and more reliably tied to measurable edge rather than to the next rush.